Hello everyone and welcome to another video. Today going to be another trade breakdown. We're going to go over a trade that I took just this last week on Tuesday, trading ES longs on an invalidation profile. Hope you guys enjoy. So starting on the daily chart, as you can see, we have this large range daily candle. This is Friday's trading. So Friday, we get a reversal off of these highs on Thursday. Friday expands massively to the downside, takes out these lows, takes out this low. And what this puts you into is a kind of situation where we are no longer working within a normal amount of volatility slash ADR, meaning that you can expect the market to move a lot more in the following days. But due to the fact that we gapped significantly over the weekend, your mind should immediately go to only Monday's high and Monday's low. Now, I said that the wrong way around, of course, but I think you get the message, right? Friday's low is way too far to be considered relevant for me to be framing ideas intra-week as well as Friday's high, let alone the previous week's high, meaning that all the context I will be deriving for the following days is going to be happening below Monday's low and above Monday's high, as manipulations above, manipulations below can help provide context. Perhaps Tuesday takes out Monday's low, and then Wednesday props itself higher, so that allows me to trade a Tuesday low higher without needing to see Friday's low taken out. Or maybe we run out Monday's high on Wednesday, Wednesday makes the midweek reversal, and then we sell off lower. So all of those weekly profile ideas, all the daily bias ideas are going to be formulated based on that Monday high and Monday low, which we obviously are going to be letting Monday pass and close the way that it has here, seeing how massively Friday traded into this low. The next thing that I can point out here, which is also very interesting, is that because Friday expanded into this relevant draw and Friday closed very deep, so it closed near its low here, the initial expectation is to see for Monday to be a continuation to the downside, right? Because we have this massive move lower, we're expecting the market to maintain that momentum and continue lower. I can see over here we have some pretty nice lows. That could be a potential target. But we're going to leave those aside for now because obviously we have this massive gap up. And so what this tells me is that if the market expands lower like this into a relevant draw, and then it gaps up aggressively on a following day, like this Monday here, this tells me that this is actually a reversal, right? Because if this weren't a reversal, we wouldn't get such a significant reaction away from that level. We'd probably stay positioned closer to the lows, meaning my initial expectation for this week is leaning into the upside simply based on this gap, and all I need now is to frame an intra-week reversal or trade off of this Monday low should Tuesday continue the structure to the upside to get on side with this trade. All right, so taking this over into the hourly chart now, you can see we have that Monday high being manipulated during the Asia session on Tuesday, and we also see the Monday low being taken out during the London session on Tuesday. We're framing this previous day's manipulation on Friday, right? So I do still think that this should be headed higher, but obviously, as you can see right here, the market trades into the Monday low. We get this retracement back up into the range, and then the market closes through this up-close candle. So this right here is where I would start to consider the potential for this being a breakout to the downside, which would then make this an Asia reversal profile, and for this to become a continuation in London to then expand in New York. Now, the only thing I need to wait on here is for the news drivers. Now, obviously, because we have the government shutdown, there are no news drivers acting on this market, but we do have the 9:30 open, which is going to be my volatility driver for the day. So I will be delaying my expectations for this trade idea into New York to see if it aligns with the Asia high, and then I will allow myself to trade this short to that low should that come in. Over on the 15-minute chart, I've let the open play out, allowed it to pass down lower. As you can see right here, 9:30 makes the low. We get this little bit of a run lower at 9:45. But what do I notice? The market does not manage to flush through this low, which is the level that I'm framing for this to expand lower. Instead, it reverses and gets this closure through this down close candle. So this right here is going to be my change in state on the 15-minute chart. And now I have to begin to reconsider. So up until now, everything was just based on having an expectation, looking at how the market is printing, trying to formulate an idea based on the current profile in alignment with that Monday range, right? Seeing the manipulation on Monday's high, seeing Asia make the high, and then wanting to trade this lower. But because this run hasn't been sustained through this low, so 9:30 did not come in and expand well beyond this low to provide any means of an entry. Instead, it turned around at 9:45 and provided this close. My mind immediately goes to, what if this is looking to go higher, right? And when I say looking to go higher, my focus really is on the midpoint of the current day's range. So what I'm going to be doing here is I'm going to be grabbing this low and I'm going to be grabbing this high. And this is going to show me the current day's range midpoint. So if the market trades like this into a high, so it manipulates a high like this, then expands lower to manipulate a low, the next objective for this market would be to return to a midpoint relative to this high and to this low, right? Because if it can't expand through this low, it would reverse, but because it's reversing into a protected high, seeing as this high took out a prior high, then that would mean that the market would stall at a level of equilibrium where it would begin to reassess whether it wants to maybe use this retracement to then set up another leg lower, or whether it wants to use this retracement to set up a low and then expand back higher into this high, right? So with those two things on my mind, I'm initially looking for the midpoint here and seeing if I can get positioned within that. Now, seeing as I was too lazy to record an outro last time, I will be putting one in now. Just gonna go over everything again, putting it all together. So what are we working with here? We're gonna stretch this back out. We have Asia reversing and we are looking for the continuation lower post London. The signature below the intraday low fails to hold, meaning that we cannot trade away from this Asia high anymore because the market does not want to continue the trend lower. Seeing as we have that Friday low framed as an initial reversal due to the large Monday gap, we can now see this as a continuation, not only Tuesday forming its intraday reversal, but a daily continuation relative to that Friday low, getting that 15-minute change in state of delivery. Initially, that's a nice signature. We're looking for that. But the concern, once again, if the market just retraces into the midpoint, it can stop moving there. It can get really slow. So we do not want to be trading beyond that point without any form of confirmation, right? Market trades higher in through the midpoint. We get that retracement and then we get the continuation signature through. Now at the time it looks perfectly fine. This does get a little bit hesitant. The market does take its time here. There is even an SMT that NASDAQ forms right here, which means that it's almost a hit or miss kind of entry. These trades are very risky, but when they do play out, it's very satisfying. The market forms this continuation, accumulates near that intraday midpoint. Then we draw right into the daily open. As you can see, as soon as it trades into the daily open, closes just below, immediate retracement because we want to be taking off the majority of our position there due to, risk management, due to understanding how the daily candle is likely to form. You get that significant reaction there, but then the market quickly picks itself back up, trades all the way back up into the intraday high, and then barely after sweeping out this short-term high again, it falls off, comes back into the midpoint of the range, and then closes somewhere around here. So that shows you once again as well that in these sorts of trades and scenarios, you have to be very selective with your exits, taking some off here, taking more off on this new drive higher, and then ultimately the rest of the position at this high, understanding that anything beyond this level cannot be really framed in my advantage, and if this were to come back into the range, I would get stopped out or maybe lose out on profits trying to be too greedy or holding for too long. I hope you guys enjoyed this, and obviously if you don't follow me on my socials yet, please do that. I don't mind for a large follower count or anything of those sorts, but I upload a bunch of lectures all the time, especially on my Twitter, and so if there's anything extra that you'd like to get into or see from me other than these YouTube videos, you can always just pick that up over there. Hope you enjoyed. See you all around.